The big misconception that we want to address today is that flipping is investing. If you watch TV, HGTV or whatever, and they've got these flip programs, they always call them the investor, the investor, the investor. They're not. They're speculators, not investors. And people will argue like, no, I'm an investor, I put my money up, blah, 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 blah. Okay, let's go to the end of the year when your taxes are due. Guess how flip profits are taxed? As investments? No. It's taxed as earned income because it's not an investment. It's earned income. So you need to be aware of this. If you flip a house and make $50,000, you do that 3 times, 150 total for the year. You got to understand you're going to be in the 25 to 28% tax bracket. So 25 to 28% of that is gone. Then you have to pay both sides of the Social Security and Medicaid, Medicare. That's another 15%. So 25 plus 15 is 40% of your profits are gone to taxes the instant you finish the deal. Now, is there anything wrong with flipping? Am I putting down flipping? No, I've done it, made a lot of money at it. It's great, but please be aware, you're not an investor until you start buying income producing assets, whether it's single family rentals, a little apartment, a big apartment, self-storage, whatever. It's got to produce cash flow to be an investment. So the misconception, flipping is investing. It's not. It's earned income and you get taxed out the butt. So keep that in mind. Don't not flip because of what I said. Just make sure you understand what it is, and as soon as you've got enough money saved to start buying assets, begin doing so immediately. Why do I tell you that? Because I got addicted to flipping and did it for 3 years. I should have been out of the game, out of the flipping game at the end of 1 year. But I got addicted to making that quick money, making those big chunks of money. Don't make the mistake I made. Become an investor as quickly as you can. That's Misconception Monday. Thanks for watching.